Welcome back, people, and welcome to the main event. Well, tomorrow we get that inflation data. We got JP Morgan making some predictions, but more importantly, we're going to be going over expected moves and giving you a range of probabilities of where price is going to be going as the market presses into new highs. All that and more on today's Stock Market Brief show, which is brought to you in partnership with Interactive Brokers. So make sure to go check out the link below. This is the brokerage of my personal choice. I use Interactive Brokers. I have a couple other accounts too, but Interactive Brokers is one of my main trading accounts, and they also have great tools. So check out that Interactive Brokers campus. They got free courses, they got free podcasts, they got free webinars, they got all kinds of stuff on this award-winning platform. I also want to make a quick update here for the Patreon. First and foremost, if you're unfamiliar with the Patreon, I do offer a swing trader for $9 a month, and it's basically gives you access to the Discord that has all types of cool benefits in there: daily, weekly, monthly expected moves. We get all these Tradie Ticks, the Tradie Ticks software, all the bots there, including the query bot. Just so much stuff in that specific thing. I get my watch list, the tight list, which is worth way more than $9 a month in my opinion. It's basically like running a scan, and I go through thousands of charts. Beyond the point, that's not really what I want to talk about today, but I now added a join for free button. So some people can become anybody can become a free member to the Patreon, and I've started posting some content in there. So yesterday I posted my stock market brief specifically just to the Patreon group. I honestly just didn't feel like making a thumbnail and a title, so I just loaded it into there. It said stock market brief for 7/9. And then today I even posted a midday update, so it gives you kind of insight of what I'm seeing just at the trading desk while I'm basically not on a live stream. So make sure to check that out. You can join there for free. Okay, so let's get into today's price action. S&P 500 pressed to new all-time highs. Are we really shocked? Not really. I made a comment on Twitter saying this does remind me of 2019 going into 2020. I don't have the chart in front of me right now. Maybe I can pull up TradingView a little bit later, or not TradingView, Thinkorswim a little bit later and show you what I mean. But really, we just get this kind of like movement to the upside with volatility that gets suppressed. Now, people react, well, do you think this? Do you think the pandemic's going to happen, or something like that? Again, that's not actually what I meant. I meant the price action to where we are now is kind of what reminds me of back then. And we kind of had somewhat of a similar backdrop, back then, but that's beyond the point here. Today, if we're looking at the heat map for the S&P 500, really, what was today driven by? Well, it was driven by, one, market flow, but two, the large market cap names, right? We actually got some breadth into the market where we saw a lot of participation, but it's really coming from the big dogs of tech. Just take a look at market net flow today. This thing is about as bullish of a divergence as you can get. The cumulative net premiums for calls, basically straight up. Puts, basically flatlined. It doesn't get more like trend worthy of a day than this. And if you're in the Discord, we talked about it when it switched over right over specifically here as the market was kind of just waning around, and as soon as we ticked to a positive convergence, bam, we were off to the races for the majority, for the rest of the trading day. So much so that we actually tagged perfectly and closed into already the weekly expectation. So if you're thinking that this is crazy by any means, the market actually priced this already in. They said, hey, our upper weekly expected move going into this current week, the upper level is 561.23. So when the week started out and we said, it's highly likely that we're going to tag this or tag this, well, guess what? We tagged it today. And now, right, we closed right on it. We're at the upper monthly expected move, and it's only the 10th, which is important because I'm going to show you why momentarily. So we're already at the upper monthly, we're at the upper weekly, and today we closed outside of a 2 standard deviation move, almost tagging into a 3 standard deviation move. So needless to say, today was an absolute bonanza of a day for the bulls. Okay, if we take a look at the CTA charts of commodity trading advisors, in short, what is that? What's a commodity trading advisor? It's an algorithm, most likely. They're algorithms, right? If the trend is up, they buy into it. If this starts turning back down and price goes against them, they'll start selling into it. And I'm showing you this because we are actually in a very high percentile. Last time we were up here was back in March-ish area, and you can see that when we started getting that movement to the downside, we had some downward convexity, which caused a little bit of volatility, obviously, in the market. Now, as the market was pressing higher today, there is something interesting taking place if we look at U.S. sectors and factor exposure. Take a look at the top performing up here. You have the VIX, you have SKU, right? Or sorry, VVIX, SKU, and VIX. So what does that mean when you have a rising VIX and you have a rising market? This right here is a dangerous place to be. Now, it doesn't necessarily mean dangerous as, hey, this is bearish. It means that the market's rising, volatility's rising. There's typically a negative correlation there. And you would think that on a rising market, volatility would come off. So we're opening the door, right? The traders are reaching for protection, in short, and we're opening the door for a lot more volatility to potentially come hither and say hello in the very near future. So that is what we need to be made aware of. But how much volatility can we potentially see? That's where we dive into expected moves. But before we do, take a look over here, right? We talked about the heat map, big mega cap names, ripping up into these weekly expected moves and so forth. Well, take a look. It's matching seasonality very well. This is NDX seasonality, right? You can see July, typically the beginning of July to the mid is like the most bullish part of the year. And it's tracking pretty darn well. But what do you notice coming up? You notice things start to kind of just wane, which is why back, around in these ranges over here, we're talking about this is where you can get, the greatest stall of 2024. And we're kind of approaching that time period here in the very near future as the market presses higher. We talked about CTA, commodity trading advisors, getting a little extended. I'll also point out NAAIM. Now, this is really just a survey that they survey asset managers and they say, they ask them a couple questions. So you can't read too much into this, but sometimes you can use it as a contraindicator, meaning that when they're like way down here, they're, more bearish the market, or they're, not quite bullish. And then when they're up here, they're overly bullish. In short, what does this mean? So if they're above 100, right, that means one, that they're fully invested with, if they're above 100, they're using leverage. And you can see right now, we're actually, I think, at a 103 reading. And typically when you get up to these ranges, can it be a counter, potentially a contra type move where you use this as a contra indicator. And that is the case. From my experience, what I noticed, you can't really use this as like, hey, this is the signal to go short. But what you can typically do is just put this in your back pocket and understand that, hey, CTAs, they're at a very, very high level, high percentile. You also have the survey that's getting a pretty extended reading, and you have price action getting pretty frothy there too as well, as we're reaching into those main levels, the monthly expected move and the weekly expected move. What does that tell you? Does that say go short the market? Not necessarily. What that tells me, it's, okay, now we should start buttoning down, locking in profits, moving stop losses up, and being aware that things are going to digest in the very near future. What do we have coming up around the corner other than CPI? We got earnings this week too. So not only do we have a huge move in the markets today, this is pre-CPI and this is pre-earnings, right? On Friday, we got not only PPI data on Friday, okay, so tomorrow, right, Thursday, we got PepsiCo, Delta, whatever, that, those aren't big, okay? The main earnings kicks off on Friday where you get JPM, Wells Fargo, Citigroup. Those are going to be the ones that are going to be important. The financials kick it off and then going into next week too as well. So earnings are going to be obviously incredibly important. I'm laughing because of this name, man. What a name for a company, dude. What a name. As. Hey, who do you work for? What do you do for a living? Oh, I work at As. It's pretty cool. Okay, moving on. So we do have core inflation data coming out. Well, core inflation, the consensus is 0.2. Honestly, I really don't care, what the report comes out as. I really care how markets digest shit because, the saying is the good news is bad news is good news is good news, bad news is bad news, all these different sayings. I just care what market flow looks like, and I don't position really heavy into and before a report. I want to see what the market does, and when it comes out, I apply an anchor volume weighted average price to it, a VWAP, and I wait to see how price works itself around those levels. Now, JPM, they came out and they're making their probabilities as far as, if it comes in between 0.15 and 0.2 to 0.25, what can the market potentially do? And from what I've seen in the past when they release this, it's been hit and miss. It hasn't really been too accurate. What's been very accurate is something that we can all do without having to pay a team of 1 million people, millions of dollars. Okay, you get my point. You can just go into the options trade tab and Thinkorswim or whatever your platform is and get the expected move for going into tomorrow. And tomorrow, we'll look specifically here at SPY. It is $3.7 plus or minus. So what does that And here, you could screenshot this. I'm going to give it to you today for SPY, for the Qs, for IWM. These are the daily. This is the upper level, lower level, and I'm even including them 2 sigma levels for you. Because why? Because today we had a taste of a big 2 sigma plus move, right? And if you think of this in terms of probabilities, what does that mean? It means that a 1 standard deviation move, so the expected move, there's a 68% probability that we're going to close within that range. If it's a 2 standard deviation move, there's a 95% probability. Today, specifically, we closed outside of that, which means what? There was like a 4% less, 3+% chance that would actually happen, that we close within that type of move. And that's exactly what took place. So what does this look like as a visual? Let me show you. So tomorrow, your CPI expected move looks like this drawn out on the screen. There's a 68% probability that we're going to be closing right here within this range. That means if we probably meet expectations or right around it. Now, if we start getting, exceedingly different than expectations, there could be a 2 standard deviation move, which means there's a 95% probability that we close within that range from this high to this low. And if we even get more action, there's a 99% probability that we're going to be below 572 and above 550 by tomorrow's close. Okay, that's lock it in. That's what happened today. That's probably the range of where we're going to be. So you're like, Michael, what can we do with this information? Well, if you're short the market tomorrow and all of a sudden we land down here at 550, it's probably a decent idea, right? Or even down here to start to cover some of it, because that means we're getting far outside of what was expected for the day. Doesn't mean you can't follow through the next day. I'm talking more for just tomorrow's price action. And the same thing happens if you're long, and all of a sudden we start creeping way up into a 2 standard deviation move or a 3 standard. Say if we gap way up here, do you think that this is the best time to go long? Probably not. This would probably be looking to take more profits and start to go short and just be tactical, understanding the probabilities of where price can close within on those specific ranges. Now, let's take a look at Gamma. Gamma, the call wall has been 5,600. Well, we got through that today, and during the middle of the day, we noticed that traders actually were reaching out further, so much so that they're even coming out to attack 5,700 on today's price action. Now, this will update obviously as time continues, and we'll see if price comes back in, if 5,600 holds. And if price does come back in 30, 40 points to around 5,600, my guess is this is going to grow and these are going to come in a little bit, okay? But as it stands right now, there are traders reaching out 5,650 and 5,700 now in the current market. So if I show you this specific chart, right? This is 5,600 level. You can see we came into it, rejected, came into it, and then we had a gamma squeeze today. Here is 5,650. We're not too far off of it. Here's 5,700, and they're close to the same size. So this is going to be a big fight zone right now. Now, if we get back below 5,600, watch out, because there's always the possibility that we come back in, but we're still in positive gamma territory over here. So it's really just bullish above 5,600 in this current state. So if we pull in around these levels, back above 5,600 would be bullish. Below it, proceed with caution. And then anything really above the gamma flip line, which currently it's at 5,520, that should probably update tomorrow. Anytime we're above that, that's where dealers look to buy the dip and sell the rip. Now, as we broke through this 5,600, I looked back over here. I'm like, well, remember 5,500 was the call wall. And we said we'd be bullish above 5,500. We'd be bearish below it. And you can see we got above it sometimes over here, and it just kind of kept on sucking price back in. And this is the 5,600, and what we're seeing here is something pretty similar, right? It went sideways, we broke through it. It went sideways, we broke through it. Are we going to see something where it pulls back into 5,600, tries to go for it again, and eventually, open interest builds, and all of a sudden we get some sort of gamma squeeze? I think that's a possibility, and we'll keep an eye on that. But we're going to take a look at something that I found interesting in the markets today, because we've been talking about divergences and bifurcation and so forth. And if you run a quick scan on FinViz, I'm looking at stocks that are 0 to 5% below or above their 52-week low. And I just found it interesting, right? Very quickly, you'll see a lot of consumer defensive names, healthcare names, consumer defensive names at near the lows. And I'm pulling this up because these names are these aren't small names, right? I filtered it by market cap. Okay, so these are all right around their 52-week lows. We're talking Johnson & Johnson, PepsiCo, which reports tomorrow, right? Cisco Systems, McDonald's, Comcast, UPS, right? Nike, which has gotten smashed. So these aren't like small companies by any means. And I think that there could be opportunity in these. Now, I haven't pulled up the specific charts on all of these. I have looked at Nike specifically, and Nike, there's some, I'm going to talk about it a different day, but you got to start to wonder if some of these names they're going to rise from the dead and come back to life eventually if we start to see some sort of rotation back. Like, how much more damage can these type of names actually take? Take a look at Starbucks, right? Bristol Myers Squibb is another one that ended up being positive on the trading day today, but has been literally in this massive down trend, right? So some of the names there, and I pulled another list, right? The list goes on, right? I pulled the top 2, and these are, all the way down to $18.4 billion market cap names, and as high as obviously 359, right? Billion. And then I wanted to also obviously look at the stocks that are 0 to 5% below their 52-week highs. And that's clear. We already know what those names are, right? The technology names, right? Microsoft, Nvidia, Google, Amazon, Meta. So you can see this is a very one-way type of market right now, a risk-on type of market. And when things change, we could pay attention to these big market cap names that taking big hits, because there may be rotations back into those type of names. So I put on another list here. You got Wells Fargo, ARM, Amgen, GE, right? A lot of these names end up being on our tight list, and we've traded in the past. Okay, so let's go head over to Thinkorswim platform right now. I want to look specifically at some Mag 7 stocks, and I want to look at obviously some names that are kind of on my radar for potentially trading. All right, so we're just going to go down the list as a large market cap names with the Mag 7 right here. So Apple has obviously been on this monster run, right? So it's been flagging out over here. Basically, AI was mentioned, and boom, we're off to the races over here. Now, 1, 2, 3, 4, 5, 6, 7 days straight to the upside, and we close at the high today. Typically, when you close at the high, there's always the possibility that we push higher. But is this where you want to establish a new position? No. What if you traded it to the long side? Well, guess what? Then you'd probably be updating your stops, taking potential profits, or waiting for potentially digestion to start a new position if you haven't entered. But these things are obviously getting very frothy from a daily perspective, from a 15-minute perspective, right? You see subtle divergences, but we're clearly in a uptrend looking at that 5-day moving average. So these are the strong names that if you're not in them, I wouldn't be executing. I'd be looking to update stops, take potential profits, and then also looking to potentially wait for consolidations. If you're looking to short these names, you got to be incredibly tactical and typically smaller positions, and you're in and out fairly quicker because a lot of the times they can pull back in very quickly, right? And then all of a sudden they shoot right back up. Okay, so Microsoft also just a nice consolidation near its highs, or a few points separated from its all-time high over here as well. We had this little consolidation and follow through today. It was just an inside trading day overall, and this continues to be right here with a rising 5-day moving average. So would I be issuing a new position? I mean, if I was comparing this one to Apple, I wouldn't mind Microsoft breaking out a little bit further, but also this one's a little bit extended there too as well. It may need a little bit more digestion. And then Nvidia is up 2.69% on the day, getting a nice follow through. We haven't quite met this prior high. I would actually prefer it to actually pull in and digest a little bit and then potentially shoot out instead of making just a quick snap like semiconductors, the SMH did. You can see over here, this is we talked about on last night's brief on the Patreon, the free Patreon, and the pay Patreon if you didn't see it. But we talked about how this could potentially go up, and we could potentially look for a shorting opportunity. If it overcuts it, we get a negative divergence and maybe play a short-term play to the downside in the near future. But I explained more how I position myself short into these type of things when they're obviously at all-time highs. It's incredibly tactical. It's less capital. When we get into Tesla, I'll show you my short in Tesla that I did today and how I was already out of the position very quickly, okay? So once we get to that name. So this was Nvidia that we talked about. Google we'll talk about. Also, new high today. So new highs, right, are never really bearish, right? So new, high, new high, right? If you thought this was the top, you're wrong, right? Higher lows, higher highs. It's just getting extended from the 20-day, 50-day. So once again, these are areas where you'd want to look to really, start to update your stops, take profits, be prepared for digestion or consolidation and so forth, because you can get moves like we've seen prior, like for example, Nvidia, right? What happened when we saw, the gap up and close at the low? Then it goes through its period of digestion, and either you want to wait through that or you don't. That's going to be up to the end user. So take a look at Amazon. Also looks pretty darn bullish. All it's doing here is getting very tight, consolidating. So a break of this little consolidation, maybe we re-go connect with the 20-day or maybe this prior breakout, right? If it comes all the way back down here to 190 all the way, right? That's literally just a back test of a breakout. And then if we start to see strength from that level, I mean, that could be another opportunity to potentially go long. But other than that, you know, this looks like it's primed to continue, obviously, its trend in the near future. Meta, too, as well. All it's doing right now is consolidating this one prior day that we saw that big move to the upside. It's kind of consolidating right at its highs there, too, as well. So nice uptrend so far. If it pulls back in, I've been watching this little lower trend over here, potentially make another run over there, okay? Now, I want to go over some of the names. Well, actually, first I'll show Tesla. All right, so Tesla obviously made a pretty nice run. A great run. In fact, it was like down 30 or 40% year to date, and now it's positive a few percentage points for the year, which is absolutely bonkers, right? Price action, it got very tight. Contraction leads to expansion. We saw an explosive move. And, you know, I shorted Tesla today. You might be thinking, Mike, but why would you do that? Well, I'll tell you why. First off, it's already been on a parabolic run, right? So big, huge move, boom, 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 right? And strong stocks typically get stronger. So I approach it how I always say I approach it. I typically use less capital, and if it goes up against me a little bit, I build into a position. My max short position is always one half, right? My max short position is one half the size of my max long position, okay? So it's always a smaller position, it starts smaller and so forth. And today I saw a run right up into this area, right where it was pre-market, the aftermarket session. And then also that was yesterday's high as well. So I said, I'll establish a little position short. And then it immediately started falling, which it didn't allow me to add to it. And I saw, basically, you'd have to confirm when I literally posted it in the Discord. I usually don't do that, but I just let everyone know because I said I was going to short it. I showed some names and I got out right here, basically right around here of that short. So it was about, and I didn't short Tesla specifically. I shorted TSLZ, I think it was. Yes, TSLZ. So right in around this area, and I played it into, right around in this area, and I played it to probably right around here, which was good for, it was about 3% for the move, and then it obviously went against me, so I was right to get out, and now I'm just looking to do the same thing, obviously again. I personally added a little bit more short at the end of the day. Sorry, not at the end of the day. I don't have my position in me. I'll have to post it in my Discord if somebody reminds me, but I did go short again in and around this range. I think it was on this break right here, actually, right about there, for a potential, more consolidation or so forth. So as you can see, when I do approach the market short, I'm quicker. I'm more aggressive on it, meaning aggressive as getting in and out, and I use smaller position sizing, okay? Let's take a look at some of the other names that I've been watching. KKR broke out of this little downtrend today, saw a nice little move today. So that was on yesterday we talked about. But so if you don't want to chase a name, right? We have stuff like CEG. CEG is kind of consolidating right here, coiling up. This is a utility name. And it looks pretty good. Like we can go retest these highs at some point, right? If the market comes in hard, right, maybe it might take these names down with it. I'm not too sure. But, CEG could be a name to continue to watch as it's just kind of consolidating here sideways. And you'd probably want to get out if it comes down into these ranges. Mid-cap stocks caught a little bit of a bid today. MDY. I traded MIDU. I traded that one yesterday, and I got out of some of it today, just to see what happens after this report. If this thing starts taking off to the upside, I'll look to re-enter to play it back up here. But MDY, it's just getting incredibly tight here, okay? So mid-cap stocks are one to watch, especially if we start to get more breadth, obviously, into the market. And then IWM has, coiling up like crazy as well. So IWM is going to be one to watch. If you trade IWM, cool. TNA, right? All those type of like 3X or this one, whatever your, T is. But if this starts to break out, which it looks like it's going to, right? It started. We don't know what CPI is going to do. But if it breaks down, you get out, right? Here's your risk. And a very conservative reward would be here. But if we start to actually trend up with this, it could be quite nice. So price action moves between contraction and expansion, right? And you can get some explosive moves, right? What's an example of that? An example would be AMD. We contracted, we broke out, we expanded, right? What's another example? Tesla, right? We even made a YouTube short about this one, right? Price action, contracted, actually even contracted here. We expanded, we contracted some more, contracted right here, and that was the main contraction. Boom, we expanded to the upside. Pretty nice. Okay, what's some other ones? XBI was one that we alerted into the trade ideas. And all I was pointing out was it was coming into a very tight consolidation, and we started to break out of XBI. So, if you trade XBI, I think there's IBB is another one, right? A biotech, and then LABU, right? If you like 3X stuff, LABU. Now, this one's already made a 4-day move to the upside. So, do you really want to chase up here? Maybe, right? But also, if it pulls in and consolidates, that could be a little bit better of a setup if you're just patient. Octua over here, this is American Waterworks over here. This one's getting very tight as well. I posted this one on Twitter. You have the 50-day sloping up. We're back above the 200, which is still kind of declining here. 20 days coiling here too. This is a utility name, I believe, that has to do with water, and it's breaking out right now. So another good-looking name in the utility space that I got my eye on. Speaking of biotechs, TWST is also kind of consolidating up here at the yearly highs, and it looks like it's trying to break out in a positive trend. So this could be one to watch there. We do have banks coming in. Berkshire is still on the radar, and Berkshire's trying to break out today. And you can see it's getting fairly tight within this range, and not only that range, over here too as well. So Berkshire, right, if you're looking at this, it's kind of just in this kind of trading box, right? So if we break out, maybe look to double that. We do have earnings not incredibly too far away, but this one's, looks like it's in a positive uptrend. If it starts breaking down from this prior swing low, maybe watch out. But as it stands right now, it looks good. Campbell's Soup is another one. Campbell's Soup is getting pretty tight here, right next to this downtrend. NWSA is News Corp, and this one is just kind of consolidating here, right at this 28 level. That's acted as prior supply, seeing some higher lows. So if we break out of it, maybe that opens the door for a few bucks higher to continue this current trend. If it breaks down, well, yeah, get out. Some of the airlines are going to be reporting here soon too as well. I pulled up UAL because UAL, among other names, right, have been consolidating, but this one's getting pretty tight in this wedge pattern. But we do have earnings, like I said, around the corner, so it's kind of hard to establish new positions when you walk into a binary event. Another one is ARK ETF, the innovation ETF. If you look at the weekly time frame, right, stocks move between 4 stages. That's accumulation, markup, distribution, and decline. And you can see here, this was accumulation phase. We had the markup, we had distribution, we had decline. This is literally textbook right over here. So what's this? It could be an accumulation phase potentially, and we could be in the early stages of a markup if the 40-week continues up, the 10-week and the 30-week. And you can see here we have been getting pretty tight. So if you go into the daily time frame, right now price action's holding the 200-day, which is flat, so there's really no trend. But if we do consolidate and we break out further, target up back up to these prior highs, so up to around 50, 52, maybe even up to 55 could be an ideal target. And if it starts breaking down, obviously, well, then just respect that, right? Now, as far as the short stuff goes, if as we're moving into these higher levels, if you're looking to short maybe semiconductors or S&P 500, you can always look at, if you buy options or do puts, sell call, whatever the case is that you choose to do, or do spreads. Me personally, I just trade the equity. So I'll look at something like SOXS, right? If I look at SOXS, you can see over here, let me pull up the daily time frame. It's moving just the opposite, obviously, semiconductors, right? SMH. So price action has just been getting kind of clobbered to the downside. And, if I take a position in something like this, even if you hold it just to, a little bit, like just to that level, that's a 9% move. So you got to understand smaller positions in these type of things, because if it keeps going against you, it could be a pretty devastating move. And then you have SPXS, and this right here is a bearish S&P 500. And you can see this has obviously been in just straight downtrend because, excuse me here, let me move that, just because obviously the S&P 500 has been moving up there too as well. So we're getting pretty frothy to the downside as expected, right? Because if you look at the SPY, we're getting fairly frothy to the upside. And these are the type of things that I like to do, right? I like to look to get into some of these names small, right? As we start to reach into these upper monthly expected moves, upper monthly expected moves, upper weekly expected moves. Sorry, let me pull up the 15-minute time frame here. There we go. As we reach into the upper monthly expected move, upper weekly expected move, and it's only the 10th, and we're coming into a period where seasonality kind of dies down. This is where I like to look to take profits and put on some different short positions just to have some inventory. I haven't shorted pretty much for the entirety of this year, and now because we're getting a little extended. I'm taking profits, got a nice cash position. My portfolio is sitting at all-time highs. We'll post that on Twitter tomorrow when it updates. But that's all I got for you on today's episode. Gave you quite a bit of information. Hope it helps out. I'll see you later.